All right, Mark here, and welcome to another Greenbridge Investing market analysis. So I'm streaming this in real time. Thank you all for joining me for this session. As you know, I'm going to be going over Bitcoin, major markets, and select stocks. I hope you have some stocks you'd like me to look at. Please feel free to ask me questions as I go through this, and if I can't fully address your question, I will make sure to follow it up in the chat room. Okay, so with that, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, let's begin with Bitcoin. And, is this really a surprise? No. Now, some people may be wondering, why didn't we take the long here? Because we have an inside bar here off of the level. But there's a problem with this. And the problem is we have this large bearish movement before it, right? And that momentum may still follow through somewhat. So this can typically turn into what looks like a head and shoulders pattern. So that's why I think it's a little early to take this swing trade idea. It's very aggressive if you take something like this, but we have not shared this idea because it's just, in my opinion, it's too aggressive. What I would like to see for the swing trade idea is a pullback, a retest, and a higher low off of the 8,500 area, or even better, a failed low at 8,000. Those would be much more attractive in terms of reward risk. And if this breaks higher and just keeps going and we missed it, I don't mind missing moves. You have to understand something, that opportunities are unlimited. You can miss moves all day long. You can miss hundreds of moves, and you don't lose any money when you miss a move. But if you try to take every move and you get caught in noise, or you're getting caught in these low probability trades, well, you lose money. And money is not unlimited. So I don't mind missing moves. All right. So that's the thing. I'm taking the chance that, this thing doesn't break out and it pulls back again and basically pushes out the early longs. So that's what we're looking for a more conservative swing trade idea. Okay, so we'll see how that plays out over the rest of the week. If you have any questions, please let me know. Now let's go over to the NASDAQ. The NASDAQ had an interesting day today, and it looks like, we weren't that surprised. Again, yesterday in the chat room, what did Andrew send out? He sent out an email closing out all of our stock trades, right? Yesterday. So was that a reactive move? No, we were preparing. We were waiting for the market to give us a signal. This large outside bar that closed yesterday, that's basically a starting point. We took out the low of that candle, although we tried to rally earlier today and the market could not. We have about an hour before this thing closes. Now, here's the thing that you have to understand. This trend that we've had since the 6,600 low is still bullish. The trend has not changed just because there's a new sell signal developing here. The trend is still intact until we take out this level, which is like that 83 and a quarter. So this broader trend structure means, what that means is we can get a higher low somewhere between here and that level. That's a good 1,000 points away, or somewhere around there. Will this thing do that? We don't know. Will this thing test this support? We don't know. But we didn't want to take the chance that it does and watch the profits that we have in our stocks just vanish. So we got out of all the stocks, and we can always get back in. If we get an earlier buy signal, perhaps a bullish pin bar somewhere in the high 8,000s would be nice. We'll consider something like that. Or if the market keeps going, well, the next inflection point, the next real inflection point after the 8,600 area is this 8,300, and the market needs to stay above that. If the market closes below that level, that's a problem. Then we probably have a broader pullback on our hands, and that's where we don't want to get caught in stuff. Andrew is interested in selling IWM call today on something like this, but that's the market of our choice. That's our instrument of choice for shorting this market. This is still aggressive. Okay. Yes, that's what that is. Yes, Bella. So the IWM is the instrument that we want to use to short this market. But again, it's aggressive because we're still shorting in a trend that's bullish. Okay. Like I said, just, two bearish bars does not qualify as a new bearish trend. So we'll see how that goes. But again, we took the precautions, we reduced our risk, and we'll see how that plays out. All right. Especially since, there's a lot of uncertainty in this and that and whatever. And we don't want to get caught in anything. A common mistake that a lot of newer investors and traders make is they get long too early. Maybe people will be buying into this low right here. It's too early. Maybe they'll buy into some kind of other thing if it goes lower. Too early. We need to see a confirmation. We need to see a certain type of structure. All right. We don't want to make that mistake of getting in too early because it can be very painful. All right. So that's the NASDAQ. Let's go take a look now at the DAX, which again is in a similar situation. I talk about it all the time, but it's nice to review the chart real quick just to kind of get a visual idea. Now, the DAX, just like the IWM, has been acting relatively weak. So, like I said, if the NASDAQ sells off, then this is probably going to sell off faster. And that's what we're getting here, right? If we take out this level right here, which is this 10,250 area, that is bearish for this thing. Okay, so if it doesn't take it out and the NASDAQ and S&P rally before that, then this thing will likely hold, or maybe you get a failed low in this area. But if it closes decisively below, along with the U.S. stock market, this thing is probably in a broader bearish movement. And in that case, you don't want to be in anything. You don't want to be long anything. All right, let the thing pull back. If you want to short the DAX outright, that's not a bad idea either. But you're measuring your risk right now from this high, which is 10,950. So, I mean, that's the ideal high. That could be pretty high risk. But if you're looking for a broader move, it may make sense. Or you can use the previous day's high, or you could go 2 days back. You could do something like that with the CFD, if you're into something like that. But just keep in mind, until the trend is really, until it's cleared, until it's confirmed that it's turning, you have to be prepared for a sharp reversal in your face. It can come out of nowhere. Okay, so that's the DAX. Again, if you have any questions, please let me know. Now, let me go into oil. All right, oil again is a market that we've been watching carefully. We'd like to be long oil. And, we're watching, I mean, the contract that I have up here is the Owanda. It's their version, which again, it's a little different than some of these other brokers. We're getting a bearish pin bar here. What I like about this chart is it's a lot cleaner and more orderly than some of these other ones. Like I'm going to show you real quick. If I go to USD WTI, which is, that's the actual, it's a dollar against the crude. I mean, this is what a lot of these Forex broker charts look like this. It has that inverted negative day and it's a mess, right? So, I mean, Owanda's chart is still usable. I like it because it doesn't have this mess. Again, with this, you have to pay attention to the structure and not get confused by the numbers, right? So the key level here is 28, which coincides with 20 on the Owanda chart. So again, we're getting the bearish pin bar here as well. If we take out the 24 level, or basically I think this is going to translate into like 16 on the Owanda chart, then that's actually going to be a sell signal. So we don't want to get caught in that either. It's best to wait. Okay, so that's what we're going to do until we get some clarity. There's still nice potential in this thing on the long side. If we can get, a nice setup, the potential is 32. So we have plenty of room there to do something with. All right, so keeping this on the radar, be prepared for this, but I wouldn't go short it. I'd rather see the higher low and go long after the next buy signal after that higher low, rather than trying to short this thing, which is in a pretty risky area to be short, in my opinion. Okay, now let's take a look at gold. Gold has been very difficult. It's been difficult, all right, and the reason why it's been so difficult is because it's been inside of this consolidation. Now, the other day when I did this analysis, right, I talked about the symmetrical triangle. We also talked about it on the podcast. What I'm sorry, Michael. What do you mean? Will this also follow other markets? I'm not sure what you mean. So gold, um, like I said, it had that symmetrical triangle, right? And again, in the podcast, I pointed it out. And oh, okay, oil, will it follow other markets? Oil, it's tough to say. Oil kind of does its own thing. It's very sensitive to a lot of geopolitical news. And they say there's a lot of manipulation with oil. So it's hard to find that correlation. I wouldn't get confused by it. That's why with that, I don't have any opinions. I just follow the chart. It seems to be that first it seemed to have been leading the market. It recovered a bit, right? Or it started to recover with the stock market, I guess, reflecting demand for, economic demand type of stuff. But I wouldn't get too caught up with that because it becomes very confusing. That's where logic tends to interfere and confuse things, because you say, oh, well, if the S&P does this, then oil should do that. Don't get into that. Just look at oil as its own isolated market. That's probably the easiest way to go about it. That's what I'm doing. I'm not paying attention to the other markets, because what typically happens is it'll give you a bias of some kind, even if you don't realize it, and that bias will mess you up. Okay, so I don't want to have any bias. I just want to know, is this thing going higher right now or is it going lower? And the price action will tell me that. Okay, so I hope that answers your question. Back to gold here. So gold is a pain because the trend has been inside of this consolidation. Now, one thing I pointed out the other day, I said, hey, you can put a limit order in the range low area, 1790s, 1780s, and try to get filled. But that's a tough game to play, because it might fill you, it might not, and the one time it fills you, it breaks below the range low, and you have to get out. So the thing is, now we had this little inside bars, and it took out the high of the inside bar. Is this a place to go long? The problem with this situation, that is a buy signal, and that is the kind of buy trigger we like. But the problem is, it's inside the range. Okay, middle of a range is a bad place to take a trade. The price action there is highly random, so it may work out. This may be the breakout leg, but it may not be. So at this point, if you're not in gold, I wouldn't chase this now. It's either you wait for a pullback, okay, and then try to get in near that range low if it pulls back again, or if you're aggressive enough, or if you don't mind taking that type of trade, you buy the breakout and hope it follows through. That's all you can do, okay? If you buy the breakout, your risk can be measured, from this midpoint here, which is around those 1690s. So that's what you look at. You're probably looking at like 30 or 40 points of risk, maybe more. It's a lot for gold, So, and if gold is noisy and it pulls back, you get caught. So that's, you can compensate for that with a smaller position, but that's just something to keep in mind if you decide to go on your own with this. But that's, it's either you take the breakout or you wait for some sort of pullback. If it breaks out and follows through, maybe the trade will work out, but there's no way to know when that breakout will follow through, right? When you had this nice big bullish candle here, it's like, oh, it's breaking out, never followed through. But when it does go, you're gonna be seeing the 18s, 18 and a halves. I think that's pretty reasonable based on this length of consolidation, because that does play a factor. That is a factor in the next target. Okay, so that's gold. Let me know if you have any questions about that. So now let me get into, I wanted to talk about the euro real quick. We had a swing trade we sent out. Now, euro, again, just like gold, euro's been difficult. Forex has been difficult in general because of all the stuff going on with the dollar. 1 minute it's looking strong, then it's weak, then it's strong. And this is why we avoid a lot of trades. So we had a Forex trade that we sent out on Friday, okay, on the euro. On this breakout here, it turned into a bearish pin bar. We closed it like on Monday, all right, and because we were getting a sell signal, and then what? Then we get a buy signal right after it, all right. We get back in, we send that out, and now it looks like garbage again. So that's noise, and that's something that now we're just going to have to let this thing play out. We'll close it again. We're not going to keep closing it and then get back in and closing it. We're just not going to do that. That's not a habit we want to get into. We have the stop in place. It either goes to the stop or it holds the support and turns around. Now, I mean, what do we like about the euro? The location. Okay, it's been holding this support around this 107 area, this 107 and a half since April. It's been holding that support. Now, can we argue that this is a lower high that it just made off of this 109 and it's going to break lower? Well, the thing is, it's not in the trend right now. So that argument doesn't really hold because it's 50-50. It might, but it might not, right? It's completely random at this point. So, you know, when you have a clear trend, like clear lower highs and lower lows, that's a different story. Can you argue that this is a lower high? Yeah, but it hasn't been making lower lows. So it's range bound. And in range bound markets, you have to basically stay with the idea that supports typically hold and resistances will typically hold until one of them breaks. And we don't know which one is going to break. So that's that. Okay, so that's the euro. If you don't like this situation, I mean, that is an ugly pin bar. If you don't like that and you don't want to take the full risk, then by all means, use your discretion and exit earlier. That's okay. You know, if it turns back around and you want to get back in, that's okay too. But, you know, for our purposes, we're just going to stay in and let the trade play out. But, you know, just because we take a certain amount of risk doesn't mean you have to take the full risk. I want to make that clear. All right. Just like, you know, people were asking if they should take partial profits and stuff like that while the market was making highs. And I always encourage, take partial profits, reduce risk, take money off the table, use your discretion. That's how you build confidence as well. All right. So, so just keep that in mind. All right. So that's the euro. Now, stocks. I know Michael, you had a couple of stocks you wanted to look at. And I know Andrew was going to get into them more, but let's pull them up here, you know, while we're at it. Right. So I know you wanted to see Qualcomm. You wanted to see AMD and you wanted to see NVIDIA. Is that right? So let's begin with Qualcomm. And now here's the thing. So Qualcomm is a market stock. That means that whatever the market does, Qualcomm is pretty much going to follow in general. So if the market's strong, Qualcomm will probably be on the stronger side, right? On a day-to-day basis. But you see on the bigger picture, not exactly, right? The NASDAQ had a much stronger move, right, relatively speaking, over the 2.5 month period or whatever compared to Qualcomm. So is Qualcomm relatively weak? Well, I mean, you know, you have this failed high. It looks very similar to the NASDAQ right now, failed high situation, and it's acting weak, just like the NASDAQ. Now, this is also coming off of a notable resistance area that dates back to an old support back in December, okay, which we can see here, all right, which is around that, what is that, $80? Yeah, that $80 level. So, you know, in this situation, there's nothing to do with Qualcomm, right? If you're not buying Qualcomm near the lower parts of the range, you know, the next support, for example, would be around this, what is that, 68 area, somewhere around here. If you're not buying it around there, like there's just no reason to buy it here. You want to buy it near lows, if anything, especially if this market is going to give us a broader pullback. So I wouldn't do anything with Qualcomm, but just watch it pull back, and you know, let the market stabilize first, and then, you know, is it a bad stock? No, Qualcomm's a good stock. You know, I know they had some legal problems or something like that. There was something going on with it, with intellectual property or whatever. I don't know. I don't pay attention to that stuff. I just look at the charts. But you know, I would be more interested for long-term trades anyway, for investments nearer the low. Okay. So that's Qualcomm. Now let's take a look at AMD, which AMD is another one, right? That's another chip stock, another semiconductor like Intel, right? It's just a less expensive stock. And AMD, you know, look at this move, right? So just like the stock market, it had to pull back in March and it rallied up to its old resistance around this 50, what is that, $55? What is this high here? $58. And now you have a failed high here, a lower high. Okay, and the same type of pullback, just like the NASDAQ. So again, you know, there's no reason to buy this thing anywhere near these levels. Just like Qualcomm, you want to wait for some sort of support levels. The first support level that I see on this thing is 47, around there, the whole number. Okay, if it takes that out, then you're looking at like 42. Now, what determines if that takes that out or not is going to be the cooperation of the general stock market. So if the NASDAQ keeps pulling back, this thing's going to break all its supports. So you can't step in front of it just saying, oh, it's at the level, I'm just going to step in front. You can't do that because it's random, right? That's why you can't set limit orders unless you're doing very small size and you don't mind taking pain, then fine. But if you're taking a position that may have you a little like, oh, I don't want to take too much pain on this, then it's better to wait for some sort of stability, which means you're usually not going to get the best price, but you want to get when momentum or the environment is more in your favor rather than getting the best price, because trying to get the best price can be very costly when you're in the midst of a huge pullback. Okay, so the ideal thing to do is to take small bites as it gets into attractive levels, and then as it turns around, you continue taking small bites and you've averaged into a nice position. All right, so that's AMD. Does that make sense, Michael? So those are the levels you're looking at there. I mean, if this thing pushes like the high 30s, those would be like the most attractive prices. But, again, stability, because really if this thing's going to be strong, it has no business testing those levels. All right, but it's going to be dependent on the market. Now let's talk about NVDA, which is NVIDIA, another popular semiconductor. I mean, this one's wild, much more expensive and wild. As you can see, this one took out its high by a bit, right? That's a sign of relative strength because the NASDAQ did not take out its high. Again, pulling back right now along with the NASDAQ. Something like this thing can pull back, right? So again, I wouldn't take any of these smaller, higher lows unless you're in for a swing trade. Like these type of movements, like, off of this, what is this, 200? No, I'm sorry. That's like 290 or 280, right? That low is 280. This type of movement is good for a swing trade. You grab some, it has a nice move in a few days, you get out, take your money off the table, especially at such levels. That's not a great place to hold on for the long term. Long-term levels, or wholesale prices, as I like to call them, are usually much more attractive areas, like supports that are much lower, like the low 230s, or even something here, in the 190s. Those are like investment levels. That's where it's like, wow, it's really low. That's like oil at $10. You have to look at that as a wholesale price. So, yeah, and that's, Michael, that's a good way to do it. Okay, Bella, INMD, yes. So actually, INMD, let's take a look at that in mode. This stock has been acting relatively weak recently. I'm not too happy about this behavior, okay? Why? It never took out this key resistance while the NASDAQ rallied nicely. It should have, and it hasn't. Now it's starting to push these supports. So, Bella, here's the thing. You start closing, this thing closes, give it a little more room, because maybe it'll try to recover. But you have to use some discretion here. It is relatively weak. We can argue that this is a lower high. And if you have some profit in this thing, it really would not be fun to give it all back. Watch this thing just, if it pulls back to its low. So it doesn't hurt to reduce some risk in this situation. Or maybe if you want to give it a little more room, or if it closes decisively below like 23, maybe you see it around 23 and a quarter, right? Right now, this thing is at 23.65. So this thing closes like below this support area here, or maybe the 20, you want to give it till 22.50 or something like that, then, have some sort of level in mind and get out if it goes there, because there's no sense in giving this back. Okay. This thing is not acting like, this is not NVIDIA, right? We just looked at that nice NVIDIA chart. This is nowhere near as good looking, which means that relative weakness can take this thing back to its low if the NASDAQ has a broad pullback. Now keep in mind, we don't know how far that NASDAQ is going to pull back. So all we can do right now is prepare and reduce our risk. If the market turns sooner and we get buy signals across the board in some things, hey, we can always get back in. That's how you have to look at it. So if you have like a, let's just say, I'm going to use for example, let's say you have 100 shares, right? And you want to reduce that risk, maybe sell half, right? Maybe sell 50 shares and hold on to 50 if you're willing to take that pain and take the chance that it pulls back to this low. Because once it starts closing below these supports, you're going to have problems with this thing. So I'd rather not deal with that. I'd rather just get out and then get back in when things stabilize. Okay, good question. Michael, what do you think about Starbucks move since the major pullback? Okay, let's take a look, Michael. Good question. Yeah, I know you mentioned that. You asked the other day, and I never got to it. So sorry about that. So let's get to it now. Starbucks. So similar to in mode, you know, lower high, you have this secondary lower high. Why couldn't this thing take out this 81 level? Like what, that was an old resistance, I mean old support, now new resistance. Yeah, it's consolidating. Now, just because we have this lower high and all this stuff going on here doesn't necessarily mean that the party's over and that this thing is weak or that it's garbage now. I mean, you know, we all know Starbucks and you know, they're a pretty solid company, right? I mean, Andrew's gone over the fundamentals quite a few times on this thing. So as far as a long-term investment goes, look, here's how you have to look at it. You can reduce risk now if you want, but I would give it at least till this low, because it's very possible that this thing is in a consolidation. In fact, you may want to give it a little room beyond this low, which is what, 71.26. So maybe you give it to like 71 even, maybe 70 and a half. If it can't recover, you know, then reduce your risk in that or something like that would probably make sense, because this thing can be in a channel, right? This thing could be in a what do you call it? Like a parallel, like a flag formation, kind of like this, right? You may have something like this going on here. You take that, right? And then you put this here like that. You may have one, and this, something like this is actually, if it stays in that, it's actually bullish. You know, maybe you get this slight failed low followed by a bullish pin bar and it turns. That's possible. So you want to give it the chance to do something like that without, you know, getting out too, you don't want to be too reactive with it. You know, it's not like it's a garbage pot stock, you know, it's a good stock. So just something to keep in mind in this type of situation. Does that make sense? Because, you know, again, some of these stocks, although they're looking ugly with the market, you know, it's okay to reduce some risk, but maybe you don't want to unload the whole position. And then you buy back what you sell at a much better price and average into a better price. Okay. Scott. Hi, Scott. Hey, no problem. Oh, great. I'm glad you find it helpful. All right. So any other questions before I start talking too much? I've almost been talking for 30 minutes. How come you let me talk for so long? Any other stocks you'd like to see? Okay. Yeah, so just something to keep in mind with the Starbucks. You know, it'll be affected if the market has a broad pullback. You know. Okay, sorry about that. My sound cut off. That's my great internet provider here. Okay, so I should be back on now. Okay, so you guys should hear me. Again, so like I was saying, yeah, sorry about that. You could thank my internet provider. So we don't know if the Nasdaq's going to make a new low, all right? And like I was saying, with all the stimulus going on and all the government intervention and all that other stuff, I wouldn't anticipate that it does make a new low. So at some point it'll stabilize and we'll have an opportunity to get back into things, okay? That's what you have to keep in mind. Don't pay attention to the news. Don't cling to logic. You just have to go by what the market wants. And if the market wants to turn, it'll let us know. Okay? If the market wants to go and push lows, it'll let us know. But I don't go into this with any opinions. You know, people keep asking me, oh, you know, do you think the market's going to go to this? I have no idea. I have no opinions. All I know is this. It needs to hold this level. And as long as it does not break this 8,300 level, then it's most likely more stable than we think, and we should be buying everything that we can. Okay, we should be buying quality stocks and all that kind of stuff, instead of getting caught up in news and all kinds of other stuff that's irrelevant or obsolete. Okay, so that's pretty much it. Do I have any other questions before I wrap this up? Any other questions? I really appreciate you coming in and participating. I always like to see that. Great questions, everyone. If there's something that you forget to ask or whatever, you can always ask in the chat room, and I'll be happy to follow up in there as well. Okay? Hey, no problem, Michael. Thanks for all your questions. Thanks, guys. Thanks, Bella and Scott and everyone else. And have a great day, okay? I'll see you in the chat room. Bye.